My name is Ashwath Sundaresan. I'm one of the partners at our fund. Pacific Channel is a deep tech, early stage venture capital investor. We're investing in individuals, teams and companies to empower them to solve really hard problems and create a better future while we still generate strong returns for our investors. The theme today is the era of abundance. However, do we have enough food to feed 9 billion people? Do we have enough renewable and clean energy to manage the energy transition? Do we have sufficient healthcare resources to provide healthcare equitably? The companies we're investing in are tackling some of the biggest UN Sustainability Development Goals. Pacific Channel's been investing for 20 years. We really focus on companies that have been developed with a backbone of strong IP and R&D. Many of our companies are university spin-outs. We've been investing via funds for 13 years, during which time we've generated very strong returns for our investors, with an average IRR of 86% across our funds. We are a financial investor that cares about impact, and we are raising for our third fund. We focus in three key areas. We're trying to solve for the future of health, the future of food, and the future of environment. We've invested in 47 companies and driven 9 of those to exits. Our acquirers have included global and local corporates. We have a pretty multidisciplinary team. We have 6 PhDs on our team, cutting across technical specialties from chemistry, biology, physics, engineering. Our executives have worked in industry across the energy, health and agri sector. Our partners and all our team have worked in science-based and engineering-based startups. We've built, scaled and exited these companies. Our team has broad networks across Asia, North America, Europe. And what that means is we can connect these really early stage companies to global markets quickly. And we've worked together across multiple funds, so we are aware of what we are good at and working effectively as a team. Our edge really stems across 4 key areas. Firstly, we've done really well at being able to extract IP and intellectual property from the universities and research institutes. And what that means is we can set these companies up very early with a strong competitive moat. It also means that we can access the right technical talent early on to shape these companies going forward. We're really good at forming companies and operating them. Spinning out companies is really, really difficult, but we're rewarded because we're able to take a sufficient equity stake up front to drive returns. And then we're able to swamp our own resources to really accelerate the development of these companies. We're really good at generating or driving for exits. Throughout our diligence process, we will actually start talking to prospective acquirers early on to get a sense of where these companies are going to go. And I think a point Steve made earlier is we're really good at capturing the valuation arbitrage that comes from building capital-efficient companies in New Zealand and Australia and then transacting to global markets at global prices. Our first fund invested in 31 companies, and we did well by our investors. We generated 101% realised IRR and delivered just under 2 times the committed capital. And I think the case study of Engender Technologies highlights our fundamental approach. So we came to the University of Auckland with 5 defined problems in the agri sector. We looked for technologies that could solve some of these, and we identified some capabilities that used photonics and microfluidics. We realised that you can use these technologies to identify the sex of bull sperm. We extracted that IP. We formed a company, Engender Technologies. We instilled a management team to support this company. And then within 6 years, we sold that to CRV, a European-based animal diagnostics company. We generated 75 times our initial investment. We've taken that approach and now run that as a general approach with all the universities in New Zealand. We go to them with clearly defined industry problems and look for technologies that can solve some of these. And we can do that because we have a technology team and market intel through our experiences. In 2020, we launched our second fund. That was a $55 million fund, and our cornerstone investor was the New Zealand Sovereign Wealth Fund with a contribution of $20 million. We have not yet realised an exit on that, but we have maintained a positive return in general, an indicator of our price discipline when we're investing in these assets. We've invested in companies that are tackling big challenges. Quantify Photonics is looking at how do you create the next set of next generation communication tools, and we've co-invested with Intel Ventures. Geo40 is looking at how do you extract lithium from geothermal waste, and is now developing pilot trials in the US. And Vortex Power Systems is building their pilot to show that you can take waste heat and convert it back into electricity. We've made mistakes in the past, and we've learned from them, and we've embedded our learnings into our diligence process. We know that teams matter, and the composition of team matters at these early stage companies. And so as a result, we are now really good at assessing the right combination of technologists and commercial people in these companies. We've worked to develop recruitment relationships with global recruiters to identify this talent. We've learnt firsthand the challenge of what happens when a scientist publishes a critical piece of IP and what damage that can do to a company. We've improved our diligence process to really stress test all of the intellectual property, and we will review scientific journals. We will then set up appropriate governance processes to manage IP leakage as these companies grow. And we've also found that these companies sometimes fail because of lack of capital, and so we've built our relationships with follow-on and co-investors globally. We're a very active investor, and I think we genuinely believe that being active helps accelerate the development of these very early stage technological heavy companies. We have launched our third fund, and it will work on the same key thematics of health, food, and environment. We're looking at companies right from the university spin-out stage up to Series A investments, and we're targeting a 75 mil close. In the past year, we've reviewed 100 companies, both across Australia and New Zealand. We've made commitments to invest or have invested in 6 of these. For anyone that's been in an MRI machine, you know how confronting it is to hear the thump, thump, thump of that machine. So we're looking at Mars Bioimaging, who are miniaturizing the MRI technology in a way that doesn't have any radiation. We've committed to invest into Zefco, a Melbourne-based startup tackling water waste in the fabric dyeing industry. And we're looking at green gravity, converting old mine shafts into energy storage solutions. We are raising Fund 3. We've had a first close of 30 million. Our management is contributing 10% of the 75 million. If anyone is interested, we will be outside, and I look forward to hearing from you all. Thank you.